We will now begin with the 8th panel discussion, CCP Risk Management in a Fat-Tailed World, moderated by Silo Shakri, founder and managing director at SCL Advisory Limited. Please join us. And joining us as panelists are Wael Al-Hazani, Chief Executive Officer at Mukasa, Abdullah Abdin, Chief Operating Officer at Bahrain Clear, Rafael Plata, Secretary General at European Association of CCP Clearinghouses, whom will be joining virtually, as you can see on the screen. And last but not least, Christian Lee, a partner at Psionic. Please have a great discussion.
Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, ladies and gentlemen. My name is Salwa Chakri, Managing Director of SCL Advisory. I'll just quickly redo the intro so you know who's sitting near me. So we have Abdullah Jafar Abdin, who is the COO of Bahrain Clear. We have right sitting close to him, Wael Al-Hazani, who is the Chief Executive Officer of Mukasa, which is the Saudi clearinghouse. Right near him, it's Christian Lee, who is the partner at Psionic, a consulting firm for market infrastructure. And joining us from far away, virtually, is Rafael Plata, who is the Secretary General of the European Association of Clearinghouse. So thank you all for joining me today. Before I start, I just wanted to thank the AFC, the Arab Federation of Capital Market, for inviting me to take part of this prestigious event. And in particular, I want to give a massive shout out to Reem, Fadi, and Joe for an excellent organization. So thank you very much. So today's subject is CCP risk management in a fat-tailed world. So when we talk about a fat-tailed world, we're talking about events that have a low probability of happening, but when they do happen, they have a high impact on financial markets. So in the past year and a half or so, we've seen massive amounts of shakeups in global markets. With the war in Ukraine, following that, we have a very high inflation environment, which has led central banks to increase interest rates, and that's basically across the board. And then following that, with some consequences where we've seen falling of some of key banks, regional banks in the US, such as the Silicon Valley Bank, that then has followed with other issues around the banking sector in the US, which had somehow echoed the 2008 financial crisis. But of course, we are extremely far from that. So to set the tone, why is that so important to have CCPs in such environment? I would like to ask Rafael if he can give us a bit of an understanding of what is the function of a CCP and why is the CCP so important? Rafael, to you.
Thank you, Salua. Can you hear me well?
Yeah. I can hear you very well, yes.
Super. Thank you very much. So thanks indeed to the Arab Federation of Capital Markets for having me here virtually. I would love to be with you guys in Oman today. I would love to have been back there. But this time I need to stay in rainy Brussels, very gray, but still interesting to be here with you all. I think it's really interesting, Salua, you stressed the topic, the title of the panel, the fat tail part. I think fat tail is really interesting because lately we have seen so many events that one would consider they're really tail events, but actually this tail, it is becoming quite fat lately because we have seen so many extreme events happening. So you mentioned them, you mentioned several of them, you mentioned the war. We mentioned the energy crisis. There is a pandemic that we had as well. We also had, so all of these reflects that there could be extreme situations happening. And where do CCPs come in? Well, CCPs come in to do a relatively basic function. They come in to guarantee the performance of transactions. That's in a nutshell what CCPs do. And how does it link to fat tail? It's because they guarantee the performance of transactions and they're supposed to guarantee them in any type of situation. in business as usual, but also in extreme but plausible, or even beyond extreme but plausible scenarios, to use the jargon that CCPs use. What does this mean? Well, this means very, very extreme events. And you refer also to the global financial crisis at the end of the 2000s. I think this is probably where CCPs in the last 20 years became more prominent, because at the end of the 2000s, we start seeing several investment banks, big investment banks in the US in trouble. And namely, there was one, Lehman Brothers, who had quite some exposure to capital markets. And Lehman goes bankrupt, and authorities say, oh my God, what's going to happen? There is contamination in the market. All the banks start to potentially going bankrupt as a result of that. But authorities realize that there is one corner of the Lehman activity that really did not suffer that much. And that corner was all the Lehman activity that was actually cleared through CCPs. Just to give you some figures, Lehman had 10 billion exposure, 10 billion US dollars exposure towards the CCP, the largest CCP that it was using at the time, LCH Limited. And to resolve all those positions, all those 10 billions, to unwind them and to make markets continue, it took like a couple of days to do like 90+% of those trades, and only 30% of the resources that Lehman had given in exchange for those 10 billion US dollars were used. So authorities saw that and they said, oh, wow, hold on, this worked. So we should probably promote the use of CCPs going forward. And I think, obviously I work for CCPs, but I do think that they took the right choice, because after all this promotion, we have seen that CCPs worked in other fat tail events. So we had the COVID-19 market stress. So we've seen some of the biggest drops in markets ever in some indices, some of the biggest in some others. So that worked, no issues. We had the energy crisis in Europe last year, that worked, no issues. So I think all of this shows that CCPs do perform a good role in trying to guarantee the performance of transactions. And with this, I'll finish. I think we have also seen a reflection of that in the number of CCPs around the world. So just in Europe, which you could argue it is perhaps a more mature market, 15 years ago, we had around 14, 15 CCPs. Today, 2023, we've got 19. So there is almost, 30% more than we used to have. Also in the GCC region, well, you see you have very interesting developments there. We see, Abdullah is sitting in the panel, Wael is sitting in the panel, but I guess in the audience we may have Haitam or Alex from Muscat and Kuwait. So there is a lot to reflect that CCPs actually perform this good role of guaranteeing the performance of transactions.
Thank you very much, Rafael. And indeed, you have mentioned that increasing numbers of CCP. So obviously, this is the Arab Federation of Capital Market. We have a number of securities exchange here with us today. And often the question is, when you are an exchange, do you set up a CCP based on the development of the capital market? Of course, there's a lot of requirements there. So I want to ask actually, Abdullah Abdin, with regards to setting up a CCP, would you rather start a new CCP, or would you rather use and leverage existing CCPs, particularly in your market, Bahrain?
Thank you, Salwa. It's really great pleasure to be among such an experienced, an amazing panelists and audience. I would like to take this opportunity to thank AFCM, particularly Mr. Rami, for approving us as Bahrain Clear to become the newest member of AFCM. We've seen very interesting topics, and for the first time I've attended lots of conferences and events, but this one was really focused on carbon credit, focused on ESG, very, very important topics, and now CCP. Going back to the question, Salwa, I think setting up a CCP for the newest clearinghouse and the region, we think it's very important. It comes in line with the Kingdom's Vision 2030. It comes in line with the Kingdom's economic recovery plan. And we made sure that the moment we did the spin-off as a clearing and settlement operations from the exchange to an independent entity, which is Bahrain Clear, we made sure that CCP is there in our roadmap, and at the right time. We, as Bahrain Clear, started to provide the full-fledged services, i.e. on the primary market, secondary market, and we successfully implemented the full-fledged of post-trade services, including asset services. Today, yes, we are in the final stage just to make sure that the setup is there. Now, your question is that to have a new setup or to use an existing, we are considering the size of our market and of course, the cost. We know that the CCP usually, when it comes to cost, is really very high. And maybe we can elaborate more on the upcoming questions.
Yes, absolutely. Thank you very much, Abdullah Abdin. So Rafael has mentioned, when setting up what CCPs are, we really understand that CCP guarantee transactions and the part of the deal. So they become the buyer to every seller and the seller to every buyer, right? So on that aspect, should CCP underwrite risk without limit? And would alternative financial resources for CCP resolution be an option?
Thank you, Salwa. But let me just want to thank Arab Federation of Capital Market for the invitation, and also for Muscat Stock Exchange for the great hospitality and great conference. So back to the question about CCP. The ultimate goal of any CCP is to manage risk and maintain a financial stability on the financial market. Yes, it's expected that CCP will take some certain level of risks. This is part of the core function of the CCP, as I mentioned. But this need to be taken in a way that guarantee the settlement and as well resolve any default that may occur. This does not mean, to answer your question, will the CCP take an unlimited risk? For sure not. It will always be given to the CCP itself to decide based on their risk appetite approved as part of their governance structure. Now, using the second part of your question, using the alternative financial resources, as part of the role of the CCP is to maintain financial stability and avoiding or minimize any systematic risk that may occur. CCP could face a distress situation where they need the financial resources. This resources could come in a form of a support as a resolution fund, for example. And this resolution fund could be provided either by the markets or by, the participants, or by the governments, for example, the central banks. They could provide a financial support to the CCP in order to recover and recapitalize the CCP after distress situation, and also cover the losses and provide temporary liquidity on the market. Now, as obvious challenge for this resolution fund or recovering a CCP, we should expect this resolution fund or any financial support given by the sector or by the government will be always limited and always subject to a lot of, I would say, prerequisite rules and regulation to manage that. But also the size of that resolution we should expect it will be always limited. So we should always make sure that we have a right balance by assuming market participants will have, I would say, a wisely way to manage their risk and the incentives to manage their risk, and they should not rely that the CCP always will be built out by the governments or by the markets. And this could be easily done by having a good governance of rules and regulation, and also CCP to monitor this on the market, to maintain and make sure that all the market participants or the CCP members always have the right balance and incentives to manage their own risk in a wisely manner.
Thank you very much, Wael, for the thorough answer to this question. So, Christian, obviously the role of CCP clear while reducing systemic risk in the market. We've seen, again, in the past year and a half, almost back-to-back events that are supposed to be, that are impacting hugely financial markets. So why CCP cannot fully eliminate risk posed to the market?
Thank you to AFCM, first of all, for the invitation to be here. It is a pleasure. Before getting on to the systemic risk, I'd just like to briefly comment on an earlier question about setting up a CCP from scratch or not.
Sure.
The good news is that the barrier to entry is actually lower these days. Over the past few years, in particular, the vendor solutions, they've adopted new technologies. They're much more nimble, and therefore the time for implementation and therefore the cost has reduced. Still significant, but much less than compared to a decade ago.
Yeah, a decade ago, I think the estimated cost for setting up a CCP was about $3 million US, and I think now with the development of technology, the adoption of it is a lot easier.
Okay.
That said, there's still regulation hurdles.
Sure. No, there's
yeah,
plenty of challenges.
Indeed.
But
Yes.
but that side, the technology side, is if you like the easy bit.
Right.
Onto the systemic risk and how CCPs have helped mitigate or not. I think if you I look at it, the totality of risk in the financial systems is sort of constant, more or less. It's a question of how that risk is distributed and concentrated. The advent of CCPs and the moving into clearing has, on the plus side, has meant that the risk of contagion from banks' failures, the Lehman situation that Raphael referred to, is highly unlikely to occur. We've had the three mid-sized US banks failing this year, and of course it had an effect, but it was a ripple effect. It was contained.
Yeah.
So there is a lot more confidence in the market that a failure of a major bank would not necessarily have that contagion domino effect that we saw in 2008, which resulted in government bailouts, etc. We also have, through the development of client clearing solutions, the ability for the buy side to access clearing, and that gives them protection against their clearing brokers or whoever. And again, those have been positive moves over the years. What this means, of course, though, is looking at that totality of risk, is we've now got that concentration of risk in the CCPs themselves. So these CCPs are systemically important. It means they are systemically important from a global perspective, but also from a local perspective. That they fall into the category of too big to fail, and which, from my perspective, if they are well risk managed, well governed, they have the prudent measures in play, they comply with best practice, that's fine. But we always need to prepare for the unexpected, the fat tail events, which is why the need to look into those financial resources further down the so-called risk waterfall is key. So that's one aspect. Other aspects are, though, that there are said that the banking sector is a bit more secure. You do have the shadow banking sector who may not be in clearing. One of the other concerns I have is that for the smaller mid-size firms, the cost of clearing may be prohibitive. So they are outside that system and they are still reliant on that bilateral risk. There's also some products which aren't cleared. Bonds, repos, for example, they're only partially cleared. So, you know, it's obviously a patchwork of different risks, some of which are well controlled, transparent, others less so.
But do you see the trend going into obviously more product being centrally cleared? Obviously, we are seeing repo, FX, commodities.
I would certainly advocate it, but you know, I'm concerned about the concentration risk as well, particularly with the internationals. I think there needs to be that diversification. It is perhaps of concern that some, you know, for the interest rate swap market, 95% is at my old employer LCH. That's
LCH and UX clearing. Absolutely. Right. Thank you very much, Christian. So Raphael, question to you. What type of risks do CCP manage? If you can give us some understanding of the level of types of risks. Thank you.
Sure. So I think I like to say that CCPs probably manage one main type of risk and then other types of risk as a result of managing this main one. So for me, the main one is really the risk of a counterparty defaulting. So it's the credit counterparty risk. I think the whole point I was mentioning before about CCPs being there to guarantee the performance of a transaction, that translates into CCPs acting as a buffer in case there is one member of the financial community going bust. CCP acts as a buffer to ensure the rest of the community is not contaminated. And this is this credit counterparty risk management of a CCP, which to me is probably the overall risk that they manage. But then in addition to this, or in relation to this one, there's other types of risk that CCPs need to look at, because they cannot just check, you know, credit, the credit quality of this counterparty or the financials of this counterparty. No, they need to look at other areas. They need to look at liquidity risk. So what is the risk that the assets that the CCP has, in case something goes wrong, those assets, they're liquid enough, they can be used in time. We also, CCPs also need to look, I think Christian was just referring to concentration risk. I think it's in a slightly different angle, and I fully agree with Christian's point about the risk, not within CCPs, but outside of there being perhaps too few clearing members. That is a concentration risk, but that's a different type of risk. But in terms of CCP concentration risk, they look at concentration risk and they look at how concentrated the positions of different clearing members are, and also how concentrated are the collateral that clearing members provide to the CCP. You want to have quite a broad range of high level, highly liquid collateral within the CCP. So that's also something CCPs look at.
And do you think, Raphael, just to stop here, do you think that's a challenge? Because obviously having, you know, highly liquid collateral, sometimes it is hard to come by. Do you see that, you know, CCPs through their clearing members find it difficult to comply with that? Is that becoming a challenge in the market in recent events, especially knowing that we are seeing a lot of those supposedly unexpected events, but they seem to happen back to back?
Yeah, so it is challenging. In what we have in Europe, we've got standards in legislation about what does it mean to be high quality collateral. So CCPs know what it is they need to look for in terms of collateral. So that is set. But then to your point, Salua, I think you're right. Getting that collateral sometimes may not be straightforward. And we have seen that recently in the energy spikes in Europe in particular. We've seen the price of gas megawatt per hour going like 10 times higher than we've seen in already very high times. So that led to massive requests of liquidity from energy market participants in the EU. And the question was, where did they source all these collateral. So this is definitely a point. We've been, I think, in the end, well, there were no defaults, there were no issues with margin not being paid, so everything indeed worked during the energy crisis in Europe, but last year, but it was not without stress. So I think this type, so getting that type of collateral, it is basically you need to be able to stress again to prepare for that, and I think we'll get to that later on. How do CCPs prepare for this? But you need to stress and think of the worst case scenario. Actually, Salua, something that I like to say, and my colleagues at CCPs don't like it probably too much, so apologies, but I think it's a very good reflection. I always say that the impressive experienced colleagues that work in CCPs, you know, they've got like PhDs in physics, in mathematics, finance, they're super good, but I think they need to be pessimistic. And they need to be pessimistic because they need to think of the worst case scenario all the time and what could be even worse than the worst, so that we can be ready to react. And
so
then,
you're very, very sad people working in CCPs, right?
no, I love them all.
Qualification, I'm so unhappy. I see the worst in everything.
I love them all. I love them all. They're fantastic and they're business people, but they really need to think worst case scenario. It is the nature of a business, you know. And then, so I was mentioning just a couple of other points, just to have other views. Other types of risks that CCP manage, operational risk. So, you know, is there a cyber attack on a CCP or on the markets? What could happen? Is that the failure of a custodian that holds the assets of the CCP, yes, of the members? What could happen in those cases? All of this is looked at by the CCP. And then finally, I'd like to mention one more, which is a perhaps relatively new one for the mainstream media, but it's something that CCPs have been looking at in some way for a while, which is climate change risk.
Sorry, which one? Sorry.
Climate change risk.
Climate change, yeah, we will touch base on that at the end.
So we'll touch base on that later, but that's also something that CCPs looked at. So credit, liquidity, concentration, operational, and climate change. Some of the risks that CCPs looked at. There is more, but I'll stay there.
Yeah, thank you so much. There's so much to discover, to uncover, particularly when it comes to risk and risk we don't know. So Abdullah Abdin, for you, what would be your prerequisite and metrics to ensure the establishment of a CCP, particularly in your market, Bahrain, is successful?
I always hated Thursdays, and it has been the case since 2001. And I was on my way to home. I get a phone call from the African Middle East Deposit Association chairman saying that you have been elected and nominated the NAMIDA chairman. I was 30 years old at the time. Mm-hmm. I didn't sleep that night. And then I became a chairman of WFC, and then I was, you know, in a position to have an answer to every question related to clearing and settlement and depository. Of course, 40
clearing houses, right, in that AMIDA.
Exactly, and if it is WFC, it means the word CC. Yes. Then there was a trend of the CCP. I asked one of the experts, can you define CCP? And he defined it he just mentioned that definition of CCP, you are a buyer to the seller and seller to the buyer. And he kept it quiet. I thought, what next? He said, that's it. I didn't believe him. I go back to Google. I enter define CCP. It says the same. A buyer to the seller and seller to the buyer. There was no answers to. You
should ask ChatGPT, see what it answers.
Yeah, of course, definitely. And of course, in our region, when the account structure is segregated, so you have the ownership is beneficial ownership segregated. You have pre-validations prior to execution at the securities, pre-validation at the cash level. You see how the risk is really mitigated on the cash market. And we know that, of course, CCP comes when it comes to derivatives and other products. It's really very essential. And as I've mentioned, since it's in our pipeline, it's in our roadmap, we are now in the final stage of having all of the rules and regulations in place, got approved in line with international standard. We are not only members of IOSCO or any other international organizations that really assess Kingdom of Bahrain. We know that the foreign ownership in Kingdom of Bahrain is open. up to 100% since 70s, and we need to make sure that all of the services, rules and regulations, principles are up to the international standards. So hopefully very soon we'll be ready, and of course to be in line and with our colleagues in the region and international.
Thank you very much. Wael, for you, what is the demand for CCPs clearing in emerging markets? And what are the benefits and challenges of domestic CCPs clearing in EM?
Yeah, allow me to address Abdullah's question
Yeah, please.
about what is the CCP. We still answer the same question with the same answer. CCP is still a buyer for each seller and seller for each buyer. So
Yes.
this is the best simple answer to what is the CCP.
The reality is
It's more complicated, I agree. For your question about CCP in emerging market, I think the journey started back in 2008 following the financial crisis, where the CCP proved itself that its resilience to minimize the impact of Lehman Brothers default and incident. And back then, the regulators of the developed market moved to mandating the OTC, central clearing of an OTC derivatives contract. And also, beside that, they put more collateral requirements and also higher capital charges on non-CCP, non-central clearing contracts. And all of this incentivized to create a CCP. And yes, all of these related to OTC derivatives contract. However, we witnessed a transformation, an adoption, I would say, towards the cash market and other markets by adopting the CCP clearing on those markets, mainly on the developed market. But this all put a big pressure on the emerging market to follow the developed market and follow the same steps. Now, it is part of the mandates imposed today by foreign counterparts to clearly mandating the OTC contract, and this make a big pressure on the local domestic participants, where their foreign counterparty will always push for centrally cleared or CCP cleared contracts, which impose operation and also cost to the local participants. Yes, it could be mandated by the foreign counterpart, but also even if the CCP on this domestic country does not exist or it's not mandated clearing, also the foreign investor or foreign counterpart will be incentivized to use the central clearing contracts, and this is again will pose additional overhead to our local or the local participants in the domestic market. All of this put a pressure, and this is exactly what the emerging market is facing, that most of their domestic dominated OTC contract actually traded outside of home country. And in order for them to participate in this, either they become a clearing member of a foreign CCP, and this has come also with a lot of capital investment. Also, I disagree with my colleague about Christian. Is it yes, it may be less, but we still need to have a huge investment and also operation and integration with the foreign CCP. And also could be the foreign CCP have a minimum credit rating for those who would want to be a member. And maybe in the domestic member, they will fall under the minimum threshold of the domestic CCP, will not be able to become a direct clearing member, even if they have, I would say, the right resources to become a clearing member, because they fail with the eligibility to become a direct clearing member. So maybe they are forced now to use alternative approach, which is becoming a member of a general clearing member on that foreign market, which also resulted in another issue or challenges that they have no control over the cost. And also this could increase the concentration risk on those members. So that is, I would say, some background about the transformation and the merging and how now all of these maybe boost, I would say, the emerging market to introduce or consider having their own CCP in any way or form. So I would take the positive side. What are the benefits of having a domestic CCP? Yes, beside the managing the counterpart risk and credit risk, I think having a domestic CCP will improve the growth and attractiveness of the market, also will improve the credibility of the regulatory framework of the domestic market. Also having a domestic CCP improve that will have on the liquidity side, and the International Swap and Derivatives Association is the estimated at the positive impact on the liquidity of having a CCP on the OTC derivatives market, and both developed and emerging market to be increased and developed market from 20 to 40% and 10 to 20% on emerging markets. And this has resulted from minimizing the credit exposure of the counterparties. Besides this, also having a domestic CCP will have a positive impact on the I would say the efficiency of the collateral, because in the domestic CCP you will be using your local currency, you will be using your own securities, unlike becoming a member or participating in other CCP or foreign CCP, where they will use their own currency or also their securities, which will also come with its own risk. Mainly I'm talking about exchange risk and cost. Finally, on the benefit side, maybe I can also mention having a CCP in the local market will give better, I would say, option for the market participants, where they will have a wider range of clearable products that suits their needs compared to relying on a foreign CCP. That is maybe the benefit side. Maybe I'll talk about, I will conclude my answer on two big challenges. I think the biggest challenge setting up a regional or emerging market CCP and a local market will be the biggest challenge and prerequisite is to have a clearable market that is huge to cover the huge investment required, and also the operation required to run the CCP. And having a small number of participants and low trading volume will have an impact on the CCP clearing fees or the risk management practices, or both. If we will distribute all this cost among small number of participants. That is the biggest challenge that need to be tackled for introducing a CCP. The second one, which is kind of related to the first one, having interconnected and concentrated domestic market will have its own challenge on the local participants as well as the local CCP. in case of a default of a major player or major member of a clearing house on the domestic market, will have a huge impact on the market, and they will suffer from covering the losses from that huge market participants that need to be distributed among small number of CCP members. So if these two addressed, I think the domestic market or the local market will enjoy all the benefits we mentioned and more.
Yeah, thank you very much. So obviously you have put a strong emphasis on the challenges there. So Christian, when we talk about the risk management, there've been methodologies, margin methodologies being put in place and default waterfalls. Just briefly explain what a default waterfall is, and then generally how has that sort of trend moved in terms of the development of those methodologies in the market. A quick 1 minute on that. Thank you.
1 minute.
Crazy.
1 minute is tricky.
1 minute is
I could talk
impossible.
about
I'm
this for
so-
hours, but yeah, I'll try and keep it brief. I mean, the default waterfall is effectively the financial resources, the levels of financial resources available to a CCP. As I mentioned, there's huge amounts of risks in the CCP, but it's structurally not like a bank where you've got large amounts of capital. So it's effectively quasi-capital. Some of it is provided by the CCP itself, the so-called skin in the game. The other contributions would be from mutualized from the other clearing members. And typically, and best practice is that this skin in the game ranks first. So that which is
there a specific percentage in that skin in the game in terms of that sort of participation from the CCP towards that risk? Is there a percentage that you think a CCP would have the adequate level of participation to say?
I mean, there were actually European guidelines which say that it should be sort of 25% of the actual default fund, which is the contributions for the members, and that I've seen has been adopted in other markets, and that's a sort of reasonable benchmark. And then you've got the other funded resources, the default fund, and then beyond that, that's the tricky bit. That's where you get into the recovery and resolution, and these are the sort of other tools that are available to the CCPs, which it could be a combination of shareholder, it could be replenishment by the existing members, and then when right at the bottom is when you get into the nasty bit called resolution. So the general trend over the years has been to first of all more skin in the game. There's also been sort of the greater trend for what we call a defaulter pays philosophy, as in if there is a default, as much of that means more prudent margins, basically. So you don't want to be
increasing the level of margin calls.
The level of margin that is held, the initial margin that is held by the CCP. So there's definitely been evolution to smarter models. One thing I would say is though that these margin models, they are just they're just tools available to the you need to have humans, risk managers who
you need people that think worst of worst.
Yeah, I mean,
the worst.
I mean, I've worked with quants who love their models, but the models are only so good until they break, and they do tend to break. So you've got to layer that up with clear oversight, clear escalation, and the ability to be flexible to changing conditions. We have all these sort of stress scenarios, but then it's the unexpected which hits. I would say I wouldn't necessarily use the word pessimistic that Raphael used. I would say prudent. Be prudent. Be prudent. Be alert. And it's good to have the scars as well.
To have
the scars, having seen where
not too deep though.
Grey hair as well. So
we don't like deep scars. All right, thank you. So we're ill. How to strike the right balance to align the incentives of market participants with the social objectives of financial stability without impairing the objectives of the benefits of central clearing in the overall?
I think Having, as my colleagues here, they mentioned about having a CCB will always have a critical role managing all of those risks, especially the counterpart risk and credit risk of all the participants, which could result from the bilateral trading. Now, is this a right balance that could be imposed by the CCP? Yes, I think this is managing that risk is actually huge and costly. Besides this, CCP is requesting from the participants to deposit collateral, and this become as I would say a buffer for the CCP to give him an extra tool in case of fire, that CCP could use it to cover any potential losses from the participants. And having this available at the CCP will give a good comfort level to the participants that the CCP has the liquid resource that could be used in case of fire. Beside that, the CCP also, part of their risk management framework, they have other tools that will help to reduce or minimize the impact of any systematic risk that could be faced, which is the margins and also the risk pricing of a contract. In addition to this, also the default fund. I think the default fund is one of the key tool that any CCP should have, and this should give a safety net to all market participants, that in case of a default of a member, that we will have different tools and methods, and
Yes.
one of them actually is the default fund. Now, how to ensure that we have a good governance of all of these tools to make sure it's always available, it's always maintained up to the level to ensure the CCP and market participants always adhere to all of these frameworks and rules. I think I will list it. I think having a good regulations that will govern this, a good supervision, also very important. We are just not relying regulation, also make sure always everyone is adhere to all of that, including the CCP and market participants. Third one, the disclosure. I think having a disclosure also is very critical, and now
Right.
it is part of the CCP now. Nature is to disclose all those information to give a comfort to the market that CCP is not to give a wrong, I would say, or false information. It's actually sometimes highlighting a concentration risk by itself. It's very important, so you will know, and this is part of the disclosure. So if we maintain these three, I think the CCP could fulfill its obligation by managing all those type of risk.
Thank you very much. Well, I've been told to have a hard stop, but before I do, I'm going to push it a little bit. Lastly, because I need to ask actually, Abdullah Abdin, because you mentioned leveraging existing CCP. Just very quickly, are you looking at any collaborations right now around the region to leverage existing CCPs for Bahrain? Should you decide to go ahead and set a full-blown one?
Every
Huge cost or low cost, who knows?
Yeah, right. So every clearinghouse wants to have its own independent setup.
Thank you.
However, taking into consideration different factors, for us, we looked at the ownership of the regional and even international investors, be it retail or institutions. So we see our neighboring country, of course, it's Saudi Arabia, that there's a vast ownership that is being at the retail and even corporate level. Yes, if I may disclose, if you allow me a while, so we are looking into collaborating with our colleagues in Tadawul.
Okay, that's a scoop. It's very interesting, very good. Great to see regional collaboration. Absolutely fantastic, and leading the way by Saudi Arabia.
I would like to mention one more thing, that we have
Yes.
recently implemented an initiative called Tabadul Hub. We linked, for the time being, we have 3 markets with cross-border transactions
Right.
at the equity level, or I mean cash level, and then it's being expanded as we go.
Fantastic, excellent. Well, thank you so much. Thanks, everybody. Hope you find the session very insightful. A big applaud to the panelists and their great contribution, as well as Raphael. Hello, and hopefully I see you soon, sometimes in Europe, London, Brussels, who knows. Thank you.
Happy to. Thank you.